please um, give us a few minutes and then Anchor will take over. Thank you so much. We appreciate you all, our active users. Thank you for coming. Thank you for joining. We'll begin shortly. Thank you.
Thank you, Itili. Good evening, everyone. Welcome to Money Moves 2026. Our apologies, we had a bit of a technical glitch on the app and it's taking quite a bit to resolve. But thankfully, we're over and done with that now. So we're going to begin very, very, very soon. So I'm just going to give a little bit of an introduction into what we do and what we're about to do here this evening. And then I will share the bio of tonight's speaker so that we can understand all of the value that we're going to gain this evening. I'm sure we're all excited. I personally am excited to learn a lot this evening. I'm excited to take notes. I'm excited to discuss the questions because even ahead of tonight's session, we have recorded quite a number of questions. I can tell that all of us here are quite interested in learning to build wealth this year. And last year, we all know what happened with Nigeria's economy, right? I think at some point, inflation was about 35% thereabouts. I mean, inflation dropped to, say, 15% thereabouts towards the end of the year. But we all know that if you had put aside a particular amount of money in January, just kept it in a savings account just for it to sit pretty, the value of things that you could have bought with that money in January, I'm sure we all know there's a disparity between that and then what you could use the same amount of money for by December. And that's because even when inflation drops in Nigeria, even when the figure has dropped officially, the prices don't usually follow. So the value of money is very, very sensitive, to what we do with our money, the choices that we make. So I am Noella from Naira Compare, and tonight's session, as I said, is titled Money Moves 2026, How to Invest Smarter This Year. So if you're not very familiar yet, let me just give you a little bit of info about what Naira Compare does, and then we invite our speaker. Naira Compare is your go-to platform for eliminating any sorts of guesswork when it comes to financial decisions, right? You want to take a loan, just go and check for the best rates on Naira Compare. Or you want to buy crypto, go and check for the prices of coins using Naira Compare. You want to start investing, and you want to know, which of these money market funds has the best yield to date rate, go and check Naira Compare. Pretty much every financial decision that you're trying to make, or that someone around you is asking, oh, I want to do this, I want to do that. What can you recommend? Check Naira Compare. So you can just think of us as your financial GPS. When you're about to go somewhere that you're not very familiar with, the first thing you do is what? You enter your car or you enter public transport, and then you open your Google Maps and find your way. So Naira Compare easily gives you directions for any financial goal that you're trying to achieve. That's what Naira Compare does. And because of that, because of everything that happened last year as well, Naira Compare, we decided that we don't want the members of our community to go through the same thing that happened last year. We don't want to have inflation reduce the value of your money. We want to help you protect investments and the hard work that the hard work they're going to do this year. Let's actually see it. So that's what we're here for today. And I'm sure tonight's speaker is going to do justice to that. She's going to give us a very, very good presentation. So I'm about to read her bio so that we know what we can expect. All right. Tonight's speaker is named Vera Osuji. Welcome, Vera. Good evening. So Vera Osuji is growth manager at Naira Compare, a company that helps you to compare loans, savings, investments, crypto, and more financial products. With over 13 years of investment banking and financial services expertise, Vera has built strategic partnerships with banks, fintechs, asset managers, crypto platforms, and FX providers, expanding Naira Compare's investment product coverage by an impressive amount in the time she's been here. With a proven track record in investment sales at Royal Exchange Finance and asset management, and driving massive revenue growth at Credit Registry, Vera brings a deep knowledge of mutual funds, fixed deposits, stocks, crypto, and alternative investments. She has helped thousands of Nigerians access better investment opportunities through strategic partnerships and digital innovation. So tonight, Vera will be sharing actionable investment strategies to help you build wealth in 2026. Whether you're just starting your investment journey or you're looking to optimize the portfolio that you already have, you'll get practical insights from one of Nigeria's leading investment minds, and then you also get a chance to ask your pressing questions. All right, so that's for Vera. Vera, you're mute right now.
Okay. Thank you, Luella.
My
Good evening.
pleasure. Good evening.
Please, can you share the slides so I can see?
All right, we'll go ahead to do that.
All right. So, good evening, everyone. Thank you for joining us today. I'll try as much as possible to make this quite interactive, to discuss how to invest smartly this year. However, I'll start. Before we dive right in, I just wanted to ask us, how many of us started the year with a financial goal? Just drop the charts in the group. I don't think I can even say it, but I'll now know how to speak to it. If you started the year with a financial goal, just say I did. If you didn't, say I did not. It's a judgment-free zone. Or if you're still considering it, you can just say under consideration. All right. So what we are saying, the truth is, for you to invest smartly, you must have a plan, right? Please go to the next slide. So I'm going to be discussing some golden rules that will guide you in building smartly this year, making smart money moves this year, and growing your finances this year. I have about 6 rules that we're going to talk about. I ask that you pay attention, and should you have any question while I'm speaking, please drop your questions in the chat group. All right. So the first rule, next slide, please. The first rule we're going to look at is your personal financial master plan. Like I began by asking us how many of us started the year with a plan. Right? If you did not start the year with a plan, as a matter of fact, I'm different. I mean different when it comes to having New Year resolutions, etc. So I have that I abide with 5-year plan, just like that. I don't need to wait for the start of the year to come up with a plan. However, every point in time I review, I rebalance, I readjust. I mustn't do that at the start of the year. But I do understand that some of us are still trying to come up to it, So it's also very important to have a plan. If you don't have a plan, you realize that you spend so much money because there's no plan, and it's normal. There's no plan for your finances. And before you start investing, when you have a plan, before you invest a single naira, you must look at a full picture of your finances, right? A full picture of your finances. And you have to understand first, what do you own? What do you owe? What you earn? What you spend money on. It's very important. And what you want to achieve. At the end of the day, your financial plan becomes the compass that guides every money decision that you make, from savings to investing to spending with intention, right? So when you're investing money, your plan will also influence the type of investments you go into. So the first real step to succeed in investing is defining what you're working towards, your financial goals. and how much certainty you can handle along the way. You can definitely do this on your own. And first, I understand some people are not able to do it on their own, right? You can do this with a professional. What matters here is that you get it done. So at the start of the year, right, it's important to know what you want to do at the start of the year. It's important to know your present status financially. It's important for you to tell yourself your net worth actually financially. You do your asset management liability yourself, and then have a plan and a structure to your finances. Please go to the next slide. Let's look at the second rule. All right. So having done this, the next thing that is important is to ask yourself, what can you handle? What kind of heat can you handle? Right? Once understanding your risk level, once your goals are clear, right, the next crucial step is understanding the kind of risks you're comfortable with, emotionally and financially. For instance, and I say emotionally because if you're the kind of person that you get triggered with ease, there's just some investment assets you should not bother to get into, so etc. Because the truth is, when investments come down, every investment bears risks with them. When your investment comes down, you may actually have a heart attack, not knowing that it's going to change eventually, right? When you have a long-term horizon, okay, we've not gotten to that, we'll talk about that. When you have a long-term horizon, it also helps you, but when you understand your emotional stability, you also helps you to say to yourself, okay, I'm not going to invest my money in this. I may have a strong emotion, but when it comes to my money, I don't have strong emotions. I want to know where everything is going. So I'm the kind of person that wants to take it cool, you know. I'm more interested in my principal has to be steady. I'm not going to lose my principal. You can never catch me with fraud or Ponzi because I'm not excited when you tell me to come and you're going to give me 50%. Well, because of my investment banking background as well, right? So I will always act on how can you outperform or the NPR. It doesn't make sense when someone tells me that. Okay, so like I said, every investment comes with a risk. If you choose to buy stocks, you choose to buy bonds or mutual funds, you must accept the possibility that the value may drop. Right? And I say it again, every single investment comes with a risk. Sometimes the value drop may be significant, some it may not be significant. Sometimes, a lot of times, you can recover from it when you understand the concept of time horizon in investment. So, when you understand what is inside an investment, it helps you properly assess the risk. Right? Yes, because I believe we're all going to have our master plan. You have to start investing, right? Having investment plans this year. It's good that you understand what is inside that investment to help you properly assess the risks. For example, funds you invest in government-backed securities like treasury bills or insured fixed deposits are low risk. I saw a question from someone, I'm going to answer it, a question on treasury bills. So these are called cash investments. They are low risk. Stocks on some corporate bonds, crypto, usually offer high potential reward, but with higher flood fluctuation, which can be properly managed. You understand the investment you're getting into. Understanding for stocks, for instance, like I said, I'm very conservative. You can't find me outside non-defensive stocks. If it's not a defensive stock, make 200%, I'm not saying it, right? And are my defensive stocks giving me very, very good returns? Absolutely. So again, you have to understand your risk, the level. So if your goal are far into the future in children's education, maybe some exposure to higher assets like stock can help your money grow faster. But if your goal is short-termed, okay, like buying a car next year or paying rent, protecting your capital in low-risk asset may be a very better choice. I hope you got that. Right, so you will not say that because you want to buy a car next year, you then go and get into a high risk investment because you're going to get higher return. Because the truth is, there's usually fluctuations that may happen at the start of the year, and you end up selling because you are in panic and you lose money. Perhaps if you had waited over time, you would have recovered your losses. So, what I want to say to you here when it comes to knowing your risk level is don't chase quick profits. But I'm not when it comes to my finances. So, I'll say don't chase quick profits. Those get rich fast trap often leave people financially wounded, So you're building generation stability, not gambling with your future. And this strategy hasn't failed anyone in my entire history, over a decade history in investment. Please go to the next golden rule. Oh, awesome. Yeah. So diversification. I wish this can be interactive. Nola, can people talk? I don't think so.
People can speak if they raise up their hands. I'll just give the permission. So anyone who wants to speak can go ahead.
Right.
Yeah.
Okay, so let's go ahead. So diversification is the next one. You have a plan, you understand your risk appetite, your investments across different assets rather than putting your eggs in one basket. So the goal is just for you to constantly balancing your portfolio. So when your portfolio contains asset classes, they respond differently to market conditions, right? So you're better positioned to cushion yourself against major losses. So historically, right, the big three asset classes you have like stock, bonds, cash rarely move in the same direction at the same time. It has never happened in this world where the different asset classes are moving in the same direction at the same time. One performs strongly, another may be flat or even decline. So, for instance, a period that favors stocks may be challenging for bonds and vice versa, right? So by holding a mix instead of relying on just one category, you give your portfolio a smoother performance over time. If one drops, and to stay more stable overall. So it takes off guesswork. Diversification for me it's not just a safety measure for me. It's a strategy that directly impacts whether you are able to achieve your financial goal or you're not. So being too conservative can be just as risky as being too aggressive. So I would say that so if your portfolio doesn't contain enough growth-oriented assets, your returns may fall short, definitely, especially when you're saving for long-term objectives for retirement or children education. So, for instance, speaking about diversification, what I personally do to bring it home is when it comes to retirement, interestingly, aside my pension, my other asset class for retirement is stocks. Yes, stocks. And I'm getting it very right? I don't have any loss record on equity. We'll talk about what we call dollar cost averaging, and I will explain how you can build wealth, right, when you get to that point. So what I do is I buy I buy stock from different industries. So I diversify even in the capital markets section, really. Is section the right word? Yeah. In the capital markets investment class, right? I diversify, right? So if banks, I choose one or two banks that over time, I know the things I look out for, right? And I'm certain, I have a friend that's she's from a very wealthy home. The father is a very wealthy man that is late. When they pay dividend, the family gets dividend on daddy's Zenith Bank alone. The last time we talked about is like 2 years ago. Zenith Bank dividend from their father's investment when he was alive was about 30 million naira. 30 million. And you know the thing about equities again is that you take advantage of capital appreciation. When there are rights issues, you can buy at a discount. You also take advantage of bonus shares that can come every now and then. So there are different areas. Take advantage of dividend as well. So even when before old age, all right, you continue to get your dividend. And when you critically analyze your equities, you realize that you're making huge returns. Huge returns. All right, so that is it on diversification. Please can you go to the next nuggets, please. All right, paying off your high interest debts. It doesn't make sense to be, excuse me please, it doesn't make sense to me to invest in money market fund. I put, let's say, 2 million in money market fund, and my ROI is for 17%, which is average return right now, between 16 and 17%. And I have a loan with one of the loan sharks, where I'm paying 5% flat monthly. And because I'm a regular street person with this interest rates, I haven't calculated to tell myself that 5% flat monthly is 60% per annum. You know, now I go ahead and take 4 million from, I won't mention name, one of the fintechs, and I'm supposed to pay in the next 6 months. So 6 months is 30% because it's flat, thereabout, yeah. And then I took 4 million and I have 3 million where I'm getting a return of 17%. Please, how does that make sense? It doesn't. Water is leaking. My money is leaking off. It's leaking like water. So I would say that before chasing investment return, it's important to address a reality. High interest debts can quickly drain your finances faster than most investments can grow. And I'll suggest with that. So what I prefer is, I need loan for something. I use the truth is, if you're a salary earner, okay, and you earn consistent salary on some commercial banks, you can get credit as low as 2% or less than that. So I use GT Bank, and because you're a salary earner, I'm configured to quick credit. So if I need money quickly, I'd rather take GT Bank, maybe say 500,000, and my interest will be 2,000 naira in the space of 3 weeks. I pay back. I still have my investment running. I don't know if what I'm saying is making sense to someone, you know. So, like I said, I'm intentional with the word high interest debts, right? So they drain your finances faster. They don't grow your finances. There's virtually no investment strategy that consistently beats the benefit of paying off expensive debt, especially credit card or short-term loans with steep interest rate. I won't dwell so much on credit card here because in this part of the globe we don't do a lot of credit cards. But credit card can, if you manage it properly, it can be an asset, right? Whereby your credit card, you're not a revolver with your credit card at all. Pay off and you bounce. So no matter what's happening in the economy or stock market, eliminating expensive debt is one of the most reliable moves that you can make, right, to strengthen your financial foundation. So once that burden is reduced or cleared, you will have more room to save, invest, and take advantage of real wealth building opportunities. So in short, before you focus on growing your money this year, as you evaluate, recall that I started by saying that you have to have a financial master plan. And one of the things you must evaluate, you have to do your own net worth yourself, your asset minus their liabilities, what you own, what you owe, right? So before you focus on growing your money this year, make sure you're not leaking money through high interest payments. It's one of the smartest, safest financial decisions you can make, regardless regardless of market. So that is it. Please can you go to the next nugget? Is that the next one? Please check. Did I put dollar cost averaging? I thought I mentioned dollar cost. Okay, it's the last one. All right, sorry. Yeah, go ahead. You're right. Yes, yeah. Interest debts. Yeah. So the next one is the emergency fund. Yeah, please continue to share your screen. All right. So one of the things I said to myself this year, like this is the learning I took for myself this year. I realized that when I need money urgently, I invest my small investments. Yeah, very small investments. I end up going to touch to take money to pay off on something, right? I focus so much on, okay, once the salary comes, you invest A, B, C, D into some things. And before month end, I'm needing money because I tried to have a strict plan, you know. So one of the things I said to myself this year is that, hello, you're going to have an emergency fund. I've decided the amount of money that I have to put out in that emergency fund. We all know our budgets. We all know how much we spend. For some people, your emergency fund maybe just have that 200,000 somewhere that you know that something will come up. You may have to go touch this 200,000. And when you're investing, right, you replace at the end of the month, right? Some people it may be 1 million. It depends. It varies. Okay, so the most confident investors are those who know that if life throws a curveball, they won't have to sell their investments in panic. Like I said, it dawned on me this year. One of the things I realized, I said to myself is, I realized that a few occasions, not all the time, I won't call it panic, right? So when you look at your ROI on one or two small investments, then you go touch it, right? It looks like you spent all your ROIs by taking out monies. Me and denying myself or yourself the power of compounding on your ROI, returns, and your principal. So one of the things I said to manage those panic moments because you need quick cash is you just have to be willing to have the ability, right? I must have the ability to respond to life's curveballs to me when they come. So that's what an emergency fund does for you. So your goal should be 3 to 6 months of living expense saved in a safe, accessible account. So they have an investment account for things like, say, children's school fees and rent, and they have a plan. If you earn salary for how much you spend in a month, right? So if you cumulatively how much you spend in feeding for 3 months, between 3 and 6 months, that's what when I came up and said to myself, you have to rethink this. You have to go back to drawing board. I said, okay, between your 3 to 6 months living expense on feeding must be in a certain account that is accessible. So this time I don't even mind the savings account, right? Because I want to make sure that for investments, I'm actually leveraging on compounding power. Right? So money is not for shopping, it's not for vacation, it's not for emergencies you create yourself. Note that because you just create emergencies. As a lady, you go out, you see one shoe, you're like, I must buy the shoe. Tell yourself that it's strictly for life's expected punches, right? Such as a job loss, urgent repairs, very urgent repairs, sudden medical expenses. We're in a part of the world where black taxation is real, and someone calls your mom or your dad is ill, right? In the cases where they don't have HMOs, you just can't say no to such. So for such unexpected punches, that's where you should run to your emergency fund. And one thing that your emergency fund gives to you is that it gives you peace of mind and staying power. I actually felt like describing it in my native language, but it dawned on me that no, this is a professional one. Everybody will understand. But it will make so much sense in that analogy, really. But let's just go ahead. So for when others are forced to cash out in crisis, you just remain invested emergency fund, easily accessible to you for life punches, please, not for urgencies and emergencies that you created yourself, right? So please can you go to the next rule, the next golden rule. Let's see. Yeah, so dollar cost averaging. I have a couple of 10 rules I articulated for a certain purpose, right? And I said to myself, no, people need to learn about dollar cost averaging, and that is something that a lot of people don't do. They don't know it, but it's very simple. It's the simplest thing you can do. That's how millionaires are born, really, to be honest. So it's a strategy that many successful long investors swear by. So what it simply means amount of money at regular intervals, maybe monthly, quarterly, whatever schedule that works for you, right? Um, I built my investment, my equities using leveraging dollar cost averaging. There's a time I will invest 50,000 back in the time, and my colleagues will laugh at me. 50,000 K. I'm like, yeah, 50,000 doesn't matter, you know. So it may look like nothing to you, but it's very, very powerful. Very powerful. You don't invest when you have all the money. You don't even have to invest when you have all the money. And that's simply what dollar cost averaging is saying to you. You choose your interval. There are so many scenarios, but I won't be able to um, point us to some scenarios right now or share screen, right? So staying consistent even when the portfolio is negative for makes gain possible when you do dollar cost averaging. Sorry, apologies, I got a bit distracted. Yeah, so because none of us can predict the perfect moment to invest, markets will rise and fall, surprises come, sometimes shock us. If you try to wait for the best time to invest, you may end up investing at the worst time or not even investing at all. So with dollar cost averaging, you buy more units when prices are low. You buy fewer units when prices are high. Please note that. Yeah, to keep investing consistently, right? So that's assuming you're buying. You decide to be buying only MTN shares, and you were doing 50,000 every month buying MTN shares. Or should I use MTN shares? Okay, let's use Zenith Bank for instance, right? You are buying Zenith Bank. You are within 50 months, 50,000, and you started in October 2002. I did a graph on this in the past, so I just pulled it out. So it started in October 2002, and we're doing 50,000 naira. And as the truth is, as that um, December 2025, your portfolio would have grown so much that you'd have made over 1 million naira on Zenith Bank by just dropping 50,000 here and there on a monthly basis to buy Zenith Bank, right? So over time, your average cost will reduce, your money keeps working for you, and this strategy is especially useful in volatile markets where prices swing a lot. So instead of fear stopping your progress, consistency just keeps you moving forward. So just think of it like filling a bucket with drops of water slowly and steadily over time, right? And eventually you have an overflowing barrel. So wealth, one thing I want you to know, take out of here is that wealth is built with habits. I don't believe that wealth is a random luck at all. Wealth is not a random luck. It's built with habits. I know a friend of mine will always call herself a creator of habits. So when she does one or two things like, hey, where are you? I'm in the gym. She said, okay. And I'm a creator of habits. I said, yes, I know you're a creature. You're a creature of habits. Yeah, a creature of habits. So please, wealth is only built with habits, not random luck. All right. So thank you. What's the next? Can you please go to the next? I think that's it. Not yet. All right, so thank you. This is almost, we've come to the end of this presentation. So I noticed that there are so many questions around product recommendation. And when I was talking, I spoke a lot about investing in stocks, investing in mutual funds. And when Nuella started with the introduction, she talked about what we do in Naira Compare. Naira Compare is that platform that will guide you to find out, or rather compare products of providers or lenders or asset managers that you can trust, because usually the problem is making investments, and you're sure that you're investing with the right person, right? So when you go to Naira Compare, if you decide to buy equity mutual funds, okay, especially money market funds, starting looking at safe, you can always compare the rates, the yield available on different funds, and from there you can then decide to proceed to engage the asset manager of your choice, and close your transactions and begin to build your wealth. Remember that I ended by saying that wealth is built with habits, it's not a random luck at all. So that is all. I've come to the end of my presentation. I'll be glad to take questions. Thank you, and over to you, Noella.
Thank you so much, Vera. Your session was very, very insightful, and I particularly liked when you spoke about diversification and then, the example that you used. So for questions, we have quite a number here, not even from this section. Prior to the session, we have about 13 questions that were shared. And so I think before the questions begin to roll in here, because I haven't seen any question in the comment box, but right now, I think it's a good idea to start with these questions. We can take them very briefly so that we're able to go through everything. All right, first question from Akinola Olanike. I'm just starting out and honestly don't know where or how to begin investing. That's their question. So, beginner strategies really.
Well, when I saw that question, I said to myself, well, it's good you're here. That's why I started with the foundation from the basis, your financial plans, right? So you just have to start with the plan. And okay, I also ended this session by saying that you can always go to Naira Compare to compare the kind of compare between products, compare likes with likes, right? So first thing, please, is to have a plan, and then stick to your plan. Yes, Onola.
All right, thank you, Vera. The second question is from Christian J. Ezekiel. I don't know which platform or company to trust for investing in stocks or crypto. That's the question.
So Naira Compare removes the lack of trust in the ecosystem for you. So when you go to Naira Compare, I just want you to know that any asset manager, any crypto exchange you find there are reliable. So once you compare, you can proceed to click the link you find on their products, and you'll be redirected to engage the crypto exchange or the asset manager.
All right, thank you. So Tunde Balogun is asking, my small business makes less than 200K in a month. Where should I invest this instead of leaving it in the bank?
All right. Less than 200K, I would advise that you invest in mutual funds. You can start with money market funds.
All right. Next question is from Honors. It's very similar to the question before the last. I'm very confused about what the safest investments are and which platforms are actually reliable. So I know your answer was to use Naira Compare to check and to just choose one from our listings pages. So the next question from Amaka is what's a safe place to put it? Wow, so many of the questions are about safety.
So I didn't hear the
Things
next
like
question
that.
just mentioned now. Can you say that again?
Yes, I have some savings, but I'm scared of losing money. What's the safe place to put it?
So you can't get it wrong with your mutual funds, and it's important to invest with a regulated provider, right? So when you go to Naira Compare again, you can compare mutual funds options, and more specifically money market, considering the number of money, the amount of money that you have. I want to advise you to invest in balanced funds because it has high risky profiling. So compare money market options on Naira Compare and then make a decision.
All right, thank you, Vera. The next question still has to do with safety. So thank you for answering. Still, it's just an alternative. I don't want to say an alternative, but it's very, very similar. Someone is asking about knowing whether investments are legit or a scam. So Asha just pointed out, it's always a good idea to check Naira Compare for separate regulated platforms. All right, next question from Abubakar BS. I need to invest in Dangote refinery. How can I get access to register? My second question is that apart from Dangote, which company is the best to invest? Thanks.
If you need to if you need to invest in Dangote, well, Dangote refinery doesn't come to Nigerian stock exchange yet, NSE. So let's wait. I believe they'll start with an IPO. So when they start with an IPO, a lot of people would, I believe, a lot of people would indicate interest. So right now, the question of their registrar, because I read it say register, is not cannot be answered because there's no registrar to for a company that is not listed, right? And the second question on outside Dangote, you can buy Dangote sugar, you can buy Dangote cement, you can buy Unilever. If you're looking at just FMCGs, you can buy Unilever. Unilever don't. I recall buying Unilever. Let's talk about dollar cost averaging, like I mentioned. I recall buying Unilever sometime last year at 17 naira. At the end of last year, Unilever was about 17 naira. And the whole economic indices in Nigeria is looking positive. So Unilever, you can buy Aradel, you can buy Zenith, you can buy MTN. There are different good stocks, defensive stocks. I don't recommend stocks that are not defensive. So they are huge. Again, please engage your stockbroker for advice. Because you can't invest in Nigeria Stock Exchange without a stockbroker.
That's right. Thank you, Vera. So the next question is from John Ndibe. Is the discount paid on treasury bills taxed? And what other high yield investments are available in Nigeria for pensioners?
All right, so not paid on treasury bills. Discount is earned on treasury bills. And yes, it is taxed generally. Any Nigeria, America, your earned return ROI on treasury bills is usually taxed. That's the answer to that. And you also asked what other high yield investments. Just also say treasury bill is not so much of high yield, but it's within the brackets of your NPR. You work with your investment bankers or your asset managers, you can always invest in other mutual funds aside pure money markets. Except you want a direct exposure to treasury bills yourself, usually the minimum investment is higher, is more. Sometimes minimum 5 million. It really varies. So if you have that kind of money, right, of the CPs, the companies are buying the CPs. So where your money market is promising average of 16 to 17%, you can get a CP within the neighborhood of 24, 25, 26%. You can do your balance funds. Balance fund promises, but it's not, doesn't give you a specific return, right? It depends on market performance and the price at which you're buying. So you can do balance fund. You can do CPs if you have huge money to do direct exposure into primary markets.
All right, thank you, Vera. If there's any pensioner or if anyone on the call knows any pensioner who would like to invest, that was very valuable information. Now, the next question is Ugochukwu Raymond says, I want to know more about your money market fund investment.
Okay, to correct something, we don't have a money fund as Naira Compare. We're a comparison site. We don't have asset management license. However, you can go to Naira Compare and find reliable asset managers whose fund have been have history of track record over the years, and these are brands with strong management. Summarily, you can find asset managers that you can trust. One of the things, after answering these questions, you have the likes of FBN, you have the likes of ARM. After this question session, I'll hand over to. Okay, I'll just take you through how to navigate the asset management article on my site. Yeah, Anuela, please.
All right. So the next question is very similar. Blessing Suleiman says, which of the money market funds can I invest in and which bank? What type of investment fund or money market fund? So I think this is the question that you'll be able to take when you're taking us through the site and how it looks. So the last question here is by Adeshala Said. What is the minimum amount that I can invest?
As low as 5,000. Yeah, as low as 5,000 really, and you can buy when you buy, you can do multiples of 100. Meaning they can buy 5,500, 5,000.
Okay.
I think there is even a fund that does 1,000. I'm not sure, but I'm very certain of 5,000. Can you do 1,000 in mutual funds? I don't know, but let's work with 5,000. As low as 5,000, you can start your investment journey.
All right. Thank you, Vera. So I'm about to drop a message in the group chat, just reminding everyone that you can leave a comment right under. Okay, I can see a question by Olu Dream Big. Okay, I'm not quite sure what you mean. I think there's a typo here. Where can we put QUS? Olu Dream Big, please just clarify in the comment section. I'm not very sure what you mean. Okay, okay, where can we put questions? Yes, just type them right here where you type this. The question here, and then I'll just share. All right, I think our next inquirer is writing his question. in the comment. So please let's just give it a minute and then we can move on to the next segment. I think he has a
Luella, what did you say?
My apologies, I didn't realize I was muted. Yes, I think we can move along, and then when he's done typing, we can take the question.
All right. Okay, the next thing is to show us how to navigate the investment vertical on Compare. Should you want to make comparison and start your investment journey, start your investment wealth building habits, right? So, basically, kindly change your screen, kindly take us to the site. First, you type in on your browser www.nairacompare.ng. When you type in nairacompare.ng, this is what pops up.
We have a question. The person has typed a question in the box. Maybe we should just take that up. Our question is from Olu Dream Big. How reliable are the microfinance banks for 10 million naira plus investments? As I see that they are offering a way higher interest rate for their fixed deposits and other products. How reliable are microfinance banks?
Well, microfinance banks are regulated by CBN, but then again, you have to be sure of the microfinance bank you're getting into, right? Do you trust them? That's the first question. So, investment is something called alternative assets. So, let me explain. Every investment or mutual fund have underlinings. Underlinings are things that those monies are invested into that guarantees you the kind of returns that they promise, right? So, for me to invest in mutual fund, that's why I said you just can't fall prey of some people like Ponzi's. So if someone comes to tell you invest in ABC, you should be asking questions like, what are you investing into? So a microfinance bank takes your money and uses your money to give credit. So they can promise you 27%, right? They take the money from you and give it to someone that, let's say, now they take it from you at zero cost, really. Okay, the cost to you is to them is that promised return. Then they give it to someone at 6% monthly, and 6% monthly per annum is 72% in 1 year. So you can see why they can make such promise to you, right? And so they're regulated with CBN as well, and NDIC that guarantees safety of a deposit. But one thing we don't know is that safety of a deposit guarantee is to a certain tune of I don't remember a certain tune of amount, right? So you can invest in microfinance bank that you trust really. Abimbola and Co. that just came up yesterday and tells you give me 10 million. Please think twice. So ensure how long have they been in business? What kind of management do they have? Is it a brand name you can trust? Also go to Google, check Google. Perhaps you may find something. So basically, invest with a brand that you trust. That's the summary of all that I've said. And yes, that kind of ROI is possible because they invest in what we call alternative assets, such as credit. That's why their promised ROI is possible, irrespective of NPR in Nigeria. All right, I've answered that.
Yes, thank you. Yes, that's the last question. That's Last question, so please go ahead.
So I said, no, I think so. You click nairacompare.ng. This pops up, then you click on investments. You can see those. Please, can you increase the screen so they can see the options? Please, can you go back to where you're coming from when you go to Naira Compare? Sorry. Okay, make it more visible so they can see the investments when you click. Oh, beautiful. So when you click investment, scroll, we can see those. I don't know. Can you? I want us to see the investments on top where they can click them, see other funds. So when you come to the site, yeah, you click investments. When you click on investments on top, it's all these different funds pop up. All right. So when they pop up, you can see equity, balance fund, dollar fund, etc. You click on anyone. So let's click on money market fund. You click on money market fund. Yeah. So it's please go continue scrolling. Okay. So it first asks can you go? Yeah, no. Okay, no. Compare money market, beautiful, yes. So you click on compare money market funds. Yeah. So it asks you just put you want to invest 20,000 and okay, so ask you how much you want to invest and what's your risk appetite. It says 20,000. Okay, risk appetite, click very low. Then compare it. So once you click compare it, it brings up, yeah. So yeah, here we go. Here we are. You can see FBN. We all know ABN is a strong brand. You can see United Capital. We all know it's a strong brand. Keep going, please. All right. You can see ARM. We all know it's a strong brand. That's FCMB. They call Legacy. So you can just click on any of them and you start your journey. All right. So that is it. Thank you, everyone, for listening. Thank you for making our time to be here with us. It's always a privilege actually to share knowledge with anyone. So with this, I'll draw the curtain here. Thank you, Noella and the team. Over to you all. Bye.
Vera, thank you so very much for this evening's session, and then also for the answers to the questions that you provided. Thank you, everyone, for your time, for your attention, and for just being here. Thank you for engaging with us as well and signing up for this class. So we'll be in more communication with you to remind you of things that have been said and all of that. Let's have a pleasant evening. Good night, everyone. And remember that this year we will continue to make smarter money moves throughout. All right. Thank you so much. Good night, everyone. Have a pleasant evening.